Welcome to the Bueller Bias Trading Community Channel. This is Bueller, and today we're going to brush over a few quality topics. Alright, so today I'm going to kind of brush over some pattern trading breakdown, some volume analysis, some trend analysis, and some price action analysis from bigger to smaller time frames. If these are things that you're wanting to get better on, you're going to want to catch a lot of my latest streams that are in the Discord. You're going to want to catch a lot of my latest videos. If you need to hit me up for any of this help, let me know. It isn't all just paid. There's of course many free ways of doing all this. So very glad to help. I don't care about all the money thing. It's all about just helping each other grow. So lately I've been getting a lot of Instagram DMs and Discord DMs and just a lot of DMs from a lot of different traders, whether they're in my community or not, asking, do you have a lot of videos on how to navigate better? And there are tons of videos on my channel, but I wanted to post another one with these new concepts that I've been trading with. So this year I really started swing trading very heavily. So lately I haven't really been day trading as much. I've been swing trading a lot more. And a lot of people are like, how are you doing that? And it's really been just through some old pattern analysis. I'm really just going through candlestick patterns and then basing a lot of price action analysis around that. So I'm going to kind of show you my methods and how I do that and a couple things. But this chart in particular was not called out by me. At this particular time, we were playing SPR, ZM, BA. We were playing a lot of different bullish engulfings and all kinds of stuff back from weekly time frames up. So it's very similar to this, but it was either Ripcord or Warbook. I can't remember between the two, but thank you both, either one of you, for engaging in the streams. But they're the ones who actually found this. So let's get into this chart and break down how I would go through this. All right, so before we start, I wanted to ask everybody, let me ask you a few questions about this chart before we move on. You can answer back on Instagram, Discord, or better yet, the comment section of this video. If you don't want to engage publicly, try and pause this video right now and write down some TA before I move on. Let's see how close we can get to the same TA. Alright, but here's a few questions. Do you notice any patterns or candlestick patterns that you are aware of? Do you notice any trend lines, volume, levels of support and resistance? Can you at least predict or be preemptive on what's next or create a trade plan around what's in front of you right now? Alright, so now that you've gone past this, we can go through and I'll show you exactly what I wanted to show everybody. So, everybody kind of been asking me, how can you kind of navigate through, a trend just like this? How can you go up and down through the weeks, trading, swing trading, day trading, all that good stuff? And I'm going to show you some cool bigger to smaller time frame analysis. So, here you have a slight uptrend here on the weekly time, very strong uptrend here on the weekly time frame, but just a slight breakdown here on trends. So on all stocks, you'll have a nice primary trend. In this stock, you have a nice primary uptrend. Even though these aren't accurate lines, we can at least say there is a good little channel up going here, right? What do you notice inside of that channel? Well, there's going to be consolidation. There's going to be rises, more consolidation, some drops, some rises again, some crazy range, some more rises after some more drops. So there's trends inside of this trends, right? So there's a good primary trend, there's a good secondary trend, tertiary trend, all that good stuff. And within those trends are trends. Okay, so I know I'm kind of breaking everyone's head now going through that. Let's move on. So what I really wanted to show everyone was this. So here on the daily time frame, you can see we're on a good little uptrend. And a big thing when I do with the TA routine, if you haven't seen that, go check out the playlist, is a big resistance line here. And this is an emerging resistance. So this is where you can expect continuation or breakouts above. Slow movement towards, but where the big move comes from is what I'm trying to say. So let's kind of mark that and let's move on. So what I want to do here is also mark the most recent trend. So I'm going to grab from about down here, and we're going to take it up to about right up there, right? Where you can see trend was clearly broken, okay? We had our nice, and just like I covered with our trends, you have your primary, then you have your secondary trends. Price moves up, range trade, move up. Secondary trend, sometimes a range trade, sometimes a secondary trend. You never get it in the same method, okay? It'll be either your secondary or you'll get a range trade, but either way, your candlesticks are going to be what helps you spot all of this, right? So let's move on here to the current trend. So, and as you can see here, price broke down. Where am I going to grab from? Well, as you can see, price gapped up here, and then you kind of have a pretty steady leg down. So I'm going to grab from about right here. We can grab to the bottom of those two candlesticks about right there. So I want to always get at least 1 to 2 to 3 points, always. And you never want to rely on current price, okay? So you never want to grab a line and be like that, okay? So that would be a horrible trend line. So let's grab from this point. Let's do the same thing on the other side. We have a very nice, so as you can see, we had a nice trend going up. We have a very strong channel going back down now, right? So let's kind of zoom in here on the size of the move. So I'm going to click on my Fibonacci Retracements, and I'm going to grab from the meat of the bone, this low here. I'm going to move up to the high, okay, because I'm catching this move. I'm going from the low to the high. I just want to see how much has this trend break, how much is it retraced, okay? So a big thing that you guys will see me talk about in a lot of my streams, and I'll break it down even further when I start talking about the candlestick pattern here in a second, is control points, okay? One of my biggest and most favorite things to trade off is the 50% retracement line. Okay, so this is a big note on if something is bullish or bearish or has bigger chance for further retracement. Okay, so a lot of the time you'll catch a big secondary retracement. You see how I was covering that first trend, that first retracement, or primary trend, and we have our secondary trend. That secondary trend I want to see hold over this 50% here. Okay, and another note before I move on, it is not abnormal or impossible or scary or bearish to say a stock can 100% retrace. It is actually very healthy for a stock to 100% retrace back to its lows, and not lows, you know what I mean, on this current trend. So it's not impossible to say that it could return back to 16, hold, and then move higher. Okay, that's what we call a retest, a retracement. This is where bears can lose momentum, where bulls can retake momentum and hold and say, yo, we have control here. We definitely have this little staircase, because that's what price action is. It really is just a bunch of staircase. Okay, and what you're watching is analyzing the difference in momentum change between each one. You're watching the different candlestick patterns, however you trade, where people see their death crosses, their golden crosses. A lot of different traders see it a different way. As a price action trader, you just see it as a good little trend change, a candlestick pattern, a common resistance, common support break. A lot of the time is what you're playing is that. Okay, so now let's break it down even further. So now that you've seen me kind of cover the control point, you can see we also have a spike in volume, because I'm not going to cover volume too heavily in this video, but as you can see, and it's not as necessary to candlestick patterns, so it isn't always crazy when you get a cool candlestick pattern like this one. Like you see how right here you got a nice bullish engulfing on this trend line, but you don't really have like a like it isn't like a huge spike in volume, way up here above 40. But as you can see, we have that here. So very good rise in volume here on this trend change. Okay, so how could we have caught that play is kind of my next question, really. But let's zoom in on it here. So this is actually a good candlestick pattern that I'm covering in one of my little seminar workshop classes for my group is the piercing line. So this is a piercing line bullish candlestick pattern right here. These two patterns right here. So a big thing before I move on though about candlestick patterns is positioning. Okay, so never do you want to just let's kind of cover it like this. So never do you want to just catch let's say this is the stock moving in it, right? God, that's a horrible drawing. Okay, stock's moving very rapidly in a weird, uptrend like that, right? Where are you wanting to find your bullish and bearish candlestick patterns at? You're going to want to find your bullish candlestick patterns at the bottom of the trend line where you have higher probability of moving higher. Vice versa for your bearish. You're going to want to find them at the tops of these trends. So I'm going to want to find my bearish engulfings, my bearish haramis, my dark cloud covers, my evening star. I'm going to want to find those up here. Okay, I'm going to want to find my morning stars, my piercing lines, my bullish engulfings, my bullish haramis. I'm going to want to find those down here where I can catch them for better positions to move up for a higher probability move. Okay, so we have our trend lines. We have all that set. And at the end of this, I'll also go through this and show you the TA routine, because you wouldn't just have these couple lines marked. You would also have this marked. You would have this marked. You would have a lot of this marked. Okay, you wouldn't just have random levels marked. But again, marking emerging candles. It's the tops of these new moves. Candles with new space. VALE had never been right here in that recent trend, so you would of course mark that trend. You'd mark that. You'd mark this. Okay, so you'd have those couple. Let's just leave these couple marked while I move on. Okay, so now we're about to zoom in here on these two. So what I was about to cover with the control point when I was covering on the bigger time frame, saying you would use this as to know where to look for more bullish candlestick patterns or if it breaks lower, right? So right now I'm going to do my little cheat method. It's not really cheating. Grabbing from the open of that candle, going to the close of that candle, and I'm going to mark that 50% again. Okay, that light blue. Just going to put me a line right there, put it right there. And then I'm going to delete the retracement. I don't need any of that. And let's color this line so we know that it has very good significance, very high significance. So let's change it to orange. I guess it's good enough. And now we can kind of zoom in here on the 5-day, 5-minute, and we can kind of go back to these last 2 days. Okay, so let's just focus on this. Okay, so what was I just saying about the control point? What does price do if it can close above this? If price can close above this on the bigger time frame, like we just saw, it'll be a piercing line. Okay, so if price closes over that, we're looking good for a good swing trade. You can get in the last 10, 20, 30 minutes of the day, however you prefer to get in those trades. Of course, end of day, you're going to have higher probability of it working for you because you waited longer, okay? No, not always are you going to get a big move the next day. You're not always going to get a good green day the next day. Some days, you're going to have to rely on that orange level that I marked. And here, I'll show you. You're going to have to rely on that orange level I marked because some days you're going to get a red day and it's going to fight you, okay? And if that red day ends up closing over this level, you're good to go to hold it for another day. If it doesn't, you should probably wait for re-entry. Okay, so next day opens up green, moves up again, hits your Fibonacci, and it's really cool that it was also, what? Fighting on top of the emerging candle that we marked here at 21. So let's go look at that on the smaller time frames. So here's that bigger time frame level that I marked. And look where they were building support out the entire time. So yes, you could have even held longer, had the confidence to hold longer. I'm not going to get into, Captain Hindsight crap right now, but I just want to kind of cover how you can utilize trend lines, simple Fibonacci retracement information, because it doesn't take a genius to do that. I mean, it looks like a bunch of percentages and numbers, but you're just grabbing from the low of a move to a high of a move, and then you're seeing how much price retraced after that. Okay, so I could see sellers took price all the way down to the 50%, but held support with a perfect candlestick pattern. That's exactly where I would want to see a good candlestick pattern, a slowdown in sellers, a pickup in buyers. I would want to see it at that 50%, being preemptive. Okay, so we're not saying, okay, this is going to happen next or this is going to happen. We're just saying if this happens, this is what we're doing next. We're being preemptive. We're being prepared. This is what trading is. It's preparation. There's only about a couple seconds where you're actually clicking something, but most of the time you're preparing for this, okay? So kind of go back through your charts, and again, what did I ask at the beginning? I asked y'all all of you those questions. Did you get any of that TA with me? Did you see any of that? Did I show you something you may not have seen before? And control points are a very big thing that you can keep using them. So let's actually go to another little example that I actually did trade. So here on Beyond, wow, there's a lot of levels here. Let's start over. As you can see, I do a lot of charting and talking. But as you can see here, the trade here on Beyond was the fact that it had that gap down. Okay, so like Netflix, there was probably like 50 stocks that had this like weird island to it where it like gapped down and then it was on its own. And yes, earnings didn't really help out. So we need to mark two things: the gap range and then the support, the low of the move. So far we have a good support and we have good resistances that we know we need to break above. And no, I'm not going to tell you how you can catch a Reddit move because no, I'm not going to sit here and tell you I was able to catch this right here because I wasn't. We sold here at 119. Oh, I'm sorry. We sold here at 119. 118 is where I sold $1 before target because I like to sell into momentum. I don't really care about getting the top of the move or any of that. I just want to get the move that I planned out. So what do you see here? Well, you actually end up having a good harami. Then you get another harami. Then you get another harami. And then you get another candle, which this is what most squeezes are. Is when they trade inside of each other. A day trades, it's high and low of the day trades within the high and low of the previous day is pretty much what a squeeze is. And the more you get that, the more better the squeeze is because then you're getting kind of a bigger pop. You're about to get a bigger pop. It's like a bunch of air going into a balloon and it's about to explode. Okay, so what do you get after that move? You get your candlestick pattern, you get your spike up, you get your confirmation that you're moving up. Okay, we are definitely in now. Now we're in calls, okay? So now we're in our trade. What did this red candle do to a bunch of traders? It got them out of the trade. Okay, so me being preemptive, how was I able to stay in this trade during this red day to catch this next gap up? Using my control points, okay? So let's zoom in here. Let's go to the 6-day, yeah. Okay, so what I'm going to do is that cheat method I was showing y'all with the 50% retracement, okay? So we're just going to remove that. We can remove that. Y'all understand the point of the squeeze now. But what I'm going to do is here grab the open to the close. Okay, so it's not going to be the prettiest. And then we'll grab that light blue, that 50%. God, you got to be a steady hand. And then delete that. And then you can kind of change that to a different color, just to remind you it is more significant than just any of your other lines that you have marked for whatever other reasons you have them marked. So now you see how I was able to stay in that trade. Where did price close that day? It closed above that line, but it didn't once touch that line. Even low of day didn't once touch that line. So going into the next few days, or going into the next day, I was very confident with holding that. Going towards the close of this day, I was able to be like, okay, I don't have to sell this. I can hold into the next day, no problem. And then we took our 150% gains, 80% if you just sold it open, 150% if you sold at the 118, 119 target that I was mentioning multiple times over the course of multiple streams and videos and stuff like that. But the big thing here, though, is being able to mark, how did we get into that next staircase? You guys are always asking, like, how do you get into the next staircase? You always mention that. What I'm saying is breaking down the candlestick patterns and all that stuff to get you into that next staircase, and you never just get into a trade to get into a trade. When did I get into that trade? I didn't say I got in here because I just randomly was, I saw the candlestick pattern. I didn't get in here. I didn't get in here. I didn't get in here. I got in here at the end of this day. Why did I get in there? Well, because we finally exited this squeeze. We finally got out of that. Yeah, this candle would have maybe been a good entry, but that would have been very early. I wanted to get better confirmation. And then also, this was able to give me a very good level for a stop loss. So 106 being a very good stop loss. So never hit that. Price moved up. Very good trade. But just like the VALE chart, though, it utilized the 50% to keep moving higher, okay? And on this chart, it utilized the emerging candle from this left side here to hold as support to move higher, okay? So that's what you see there. You see a drop, base, rally, okay? And also, we went through trends. Now you see you have a primary trend. Now you're utilizing these as secondary trends. So yeah, play these when they're really far from their primary trend lines. Play these bearish candlestick patterns. When you see bullish candlestick patterns after a good retracement, play those. Set the risk reward. What's my stop losses on these trades? My stop losses are going to be the outside of the pattern, of course. So, of course, if price came back down and broke 21, I might as well just wait. 50% retracement. That is another good stop loss level. If you want to set a more loose stop loss, you're confident in moving up, set it at the 2050s. If you were very, very confident in this trade and you just want to be patient, you have a very good timely contract a few months out, don't worry about it. Set your stop loss at 20. That's the outside of the pattern. But I would definitely say that 50% is the best stop loss so far from just the trading I've been utilizing this year. But just going through candlestick patterns, trend lines, all that good stuff. The TA routine and the BB system. These are two things that will help you the next day in the trading too. So let's go check out this chart. So last point I'm gonna make. So what is the BB system? The BB system is a pre-market system in which you utilize the pre-market high, low, and then the previous day high and low for your next day trading. It's just meant for day trading, but this is also super helpful for swing traders. So when you go into the next day of trading, you're probably a little uneasy, like, damn, how do I hold this position? What do I do? How do I know when stock's going to tank? Well, besides watching the overall market, of course, you need to be watching SPY, NASDAQ, the Dow, all that good stuff, IWM. You need to be watching these. But mark your pre-market high, your low, your previous day high and low. Okay, so if I would have done that going into the next day here, I would know that there's a ton of support right here just between that bigger time frame level and my pre-market low. Also, let's mark the previous day high and the previous day low. Previous day low is already marked. So as you can see here, there's a ton of support here. So if there's going to be any sell-off, it's going to definitely have to go through all three of those, okay? So now right there, just off the bat, you have a ton of support. So going into the next day, let's say you wanted to hold the day long. Let's mark previous day high again. That pretty much gets pre-market high. So now to move higher, to pay you more, you definitely need to get above previous day high. You definitely need to get above this current day's pre-market high. Okay? Price ends up pushing up. Where did it end up catching support at? Lowering volume towards support. What does that mean? That is very good. You even get a little bullish candlestick pattern here. And no, I don't always utilize them on the smaller time frames, but yes, they do pop up on every time frame. The main two time frames I watch them on are the daily and the weekly. For big swing trade patterns, but then I like to break down the control points, the TA routine, and the BB system, and that gives me very, very, very high probability day trading levels. So sorry for this long video. I have a little bit of editing to do on it. Please leave a like on this video. I worked very hard on it to find these examples and actually thoroughly go through them with you guys. And I hope all of our TA lined up the same. I hope you guys found any of this helpful. And if you guys want to join the community, please click the link in the bio and you'll see all of our little links and social media and stuff. So I'll see you guys there. Thank you.